Hey everyone, Les here from BG Trading and I hope you are well. Today is 28th of August 2023 and I'll be analyzing some of the leading ASX lithium stocks. I'm going to be contrasting and comparing them and the projects as well, and take a look which one could be the best opportunity and the least risky in the current uncertainty in the macroeconomic environment. I'm also going to be looking into the lithium spot prices as well. What are the analyst prediction for lithium prices for September, October and November in China? So let's have a look. I just want to remind you, this is not finance advice. This is just us from BG Trading sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we use our strategies to chase 20 to 40% using targets and set keys of indicators. So if you like, please subscribe the channel, share this video with someone that you believe would be interested on, and finally I would like to quickly invite you to become a member of our free Facebook community. I'll be putting the details at the description below. We call the community Buy, Grow and Sell Strategy for Share Traders, and we post a lot of great quality content, including some of the stock analysis that we go through in those videos, free of charge for some of your members. Those analyses are exclusive for VIP members. Sometimes we share with you as well at that community. So let's start with lithium spot prices. Lithium prices continue to fall across all the indexes, including industry-grade lithium, battery-grade metals, also spodumene concentrates, spodumene like low concentration, also lithium dioxide and lithium carbonates. They're all falling day by day. We've been checking every single day. And we recently received a report about potentially a bounce in September as a result of China. First of all, understanding why lithium prices has been falling is because China economic situation has been degrading. They even increase interest rates to try boost a little bit more, but a lot of battery manufacturer and cars had stopped reducing purchasing of lithium materials as a result of this slowdown. Even though EV sales in 2023 was at the record high. They kind of using it as a corner measure because they don't know exactly what's going to happen. But here's the thing. We received a report a couple of weeks ago from SM Metals in Shanghai, and this report says that a lot of analysts consensus that lithium prices should bounce by September as a result of those stockpiles start going really low, and then obviously companies start buying lithium again and potentially bring the index prices and across the board, so potentially bringing those prices up again, or at least holding for this current level for a little while. I've seen all sort of projections, okay, but these guys are pretty hot because they are in China. They are Chinese analysts looking into Chinese data, so that's why we use SMM markets for. Let's kick off with the first stock, ALLKEM Limited, with the SX code is AKE. I have dedicated videos in this channel about ALLKEM Limited, but I want you to understand a little bit more what's the difference, the complexity of this company, and why it is very interesting to look into this type of company rather than companies with a single project like SAYONA Mining or Core Lithium. In fact, I actually put some comparison here so you can have a little bit idea of the scope, the size of the projects in comparison to those small cap little stocks like, again, Core Lithium and SAYONA Mining. So essentially, ALLKEM Limited currently owns about 6 different projects, which 3 of them is currently in operation. Most of revenue come from Olaroz in Argentina, out of brine, lithium carbonate produced from brine. The production capacity is about 42 kilotons per annum, and resources is about 20 million tons of lithium carbonate. So it's pretty good resource in Argentina. Only 66%, 66.5% owned by ALLKEM. Obviously, they have to split a little bit the sales and profitability out of this project. The other project they have is here in Australia called Mount Cattlin. They own 100% of this project. Is hard rock spodumene concentrate production. The only problem with this project is, and I have a dedicated section here on this analysis for each one of these projects if you want to understand a little bit more. The only problem with this this project is that the lifespan is only 5 to 6 years, and that is a bit concerning. Obviously, here you go, confirm 4 to 5 years mine extensions to 2027 and 2028, and they obviously have to start drilling projects in order to be able to get more, to increase the capacity of the reserves of this company, and that will be obviously cost consuming as well. They're going to start underground drilling program, which is a little bit more expensive than the shallow exploration, but they believe that there are a lot more spodumene in there. So let's see how it goes. So revenue increased 36% from FY22 out of this project, which is good. And then essentially they keep kicking off in this production until obviously they get more results, and but they're still going to be producing until 2027, 2028 unless something bad happen. But in this case, they most likely find more reserves and will start extracting more out of other points, other locations within this particular area there. Another project that came online is Naraha in Japan, which is a processing plant and has recently been constructed, and the first lithium hydroxide plant in Japan, which is part of production diversification strategy. They're looking at producing lithium hydroxide as well. This is a hot information here, guys, because they are currently waiting for battery grade qualifications to commence. So they're producing these lithium hydroxide battery grade, and they're waiting for their customers to come back with a feedback, which will take about 6 to 12 months in order to validate whether the lithium hydroxide is battery grade. And if it is battery grade, obviously they will be able to commercialize that. But if it's not battery grade, they have to still adjust. That probably will take a further delay as well. So out of this plan, they are able to sell 1.3 tons of hydroxide sold in FY23, with the ramp-up activities processing using Olaroz technical grade lithium carbonate as a feedstock. So essentially, they take lithium carbonate from Olaroz and they dump into this production, and they process that and make it to become a lithium dioxide battery grade, so they can sell straight away to companies, to battery manufacturers. So it's very very good diversification. You won't see that in any stock like a Lake or Core Lithium. So you really need to understand the complexity of this, and obviously this sort of a vertical integrated in some stage battery, different levels, battery materials, lithium battery materials in different levels of quality as well. And yeah, that's a positive aspect of ALLKEM Limited. Now there are other projects that are going to be coming online, but not yet, and these are the ones I really want to talk about. The first one is James Bay, which is located in Quebec, in close to where SAYONA Mining has its North American lithium project. And the interesting fact is, and I want to just give a comparison here, they are planning the overall James Bay reserves in Quebec. Only this project alone has double of ore reserves in comparison to Sayona Mining, that has 58.3 million tons, and Core Lithium, the Finnish project, that has 30.6 million tons, and Latin Resources that has 45.19 million tons of in its Colina project. So it's a huge difference, and only this project alone takes over the double of the overall capacity of Sayona Mining and Core Lithium, and pretty much only this project has more ore reserves than Sayona Mining and Core Lithium combined. So it's a huge. This project is huge, and it's gonna come online. And ALLKEM Limited, once has this project online, it will be huge, and I can tell you that. Obviously, still need to check what's going to happen with the lithium prices, but provided the lithium prices stays around this level or above, then it's fair to say that we are pretty safe with this, with exposure to this particular company. Okay, so this is James Bay, and the last project they want to talk about is Sal de Vida. Sal de Vida is under construction at the moment. It's also in Argentina. It's a brine extraction for lithium carbonate. The overall production capacity is 45 kilotons per year, and the overall resources is 6.85 million tons. Okay, because you're getting lithium carbonate out of that particular project. It's not hard rock spodumene concentrate. This is lithium carbonate. So a lot of things happening, and I really suggest you to take a look on this stock analysis that we put together and see this comparative in between James Bay project itself and Sayona Mining, Core Lithium, and Latin Resources, and take your conclusions. Just take your conclusions. You can see how small Sayona and Core Lithium and many other little players that you're looking at, and you see all those social media posts talking about how huge the project will be, are actually small in comparison to ALLKEM Limited and the other stock that we're gonna be talking about as well. So technical analysis, if you have held this stock for the last 52 weeks, you would be pretty much up, giving or taking up about 3%. Obviously, with lithium prices steady and declining in 2022 and 2023, then it didn't give investors much of return. But with the company becoming profitable, fundamentals are strong. There is a lot of profit coming out of those stocks, and they are all and ALLKEM Limited is in uptrend still. So there's no we haven't seen a breakout of this uptrend. So as long as it's uptrend, you want to be buying the stock when it's close to this sort of hypothetical support level right here, and the long-term moving average in combination to the long-term trend, which sits pretty much coincides with the long-term moving average. I'm gonna open just here so you can see a little bit better. In yellow, I have the ascending trend here, and then in pink we have the long-term moving average. And ideally, what we want to do is we want to buy the stock. We want to buy the stock under this pink line, which means buying around below $12.50 is for me a great entry. But if eventually this stock falls towards $10, it would be even better buying opportunity. Whether it's gonna go down to $10, I'm not sure. I don't know. You gotta wait to see it. But as soon as lithium prices bounce back, this is one of the stocks that going to rally first. Okay, potentially buying this stock gonna rally first, and then the small caps stay, that doesn't move much, and then you probably even have opportunity to sell these at a profit and buy the small caps and try get a little bit of upside on the small caps. But at the moment, this is very risky go with small caps. We definitely would like to keep to hold any if you're holding a position, we'll be looking at holding into those large caps like ALLKEM Limited. Now the next one we're gonna talk about is PILBARA Minerals. This is also a stock analysis that I put together based on the most recent full year result for FY23. This is the most profitable lithium producer on the ASX. I'm going to show you here the profit of this company for full year finance was huge. $2.4 billion. So just to compare with Fortescue that produce iron ore, they just released the profit today, $5.5 billion, double of this. But this one is just a lithium producer, lithium like green energy, new energy materials. So it's a new trend. And obviously, in comparison, this the profitability of $2.4 billion in comparison to ALLKEM, just so you have an idea, ALLKEM net profit was about giving or taking 700 million Australian dollars, where PILBARA profit 2.2 billion. So PILBARA is way in front of ALLKEM, and that's because PILBARA has a much more stable and huge capacity and huge ore reserves ready to go in Australia. They're not actually expanding or developing any project that is yet to create revenue. They're only improving what is existing already. So look at the profitability here for 22. So 22 they actually declared $500 million profit, and then in 23 they declare $2.39 billion profit. We note that Citibank has downgraded PILBARA Minerals, and that's why we have sell-off here. But if you look at the fundamentals, the numbers speak by themselves. And according to the guidance for FY24, sales guidance is still in line with FY23, and they're still looking at to expand at at minimized cost in comparison to what they're doing here. So essentially, they forecasting a 5.2% of spodumene concentrate production of 660 and between 660 to 690. And then if you look at this year they produced about 620. So essentially they will exceed the production of FY23 in FY24 if everything goes fine. So definitely number one lithium stock at the moment. So essentially PILBARA Minerals is sort of trading right at the ascendant support level and under the SMA 250, which for us for long-term positions, that's what we want to be buying. So as soon as if lithium prices bounces back in September, for example, I'm pretty sure this is one of the stocks that are going to break out and potentially go all the way through 6 and 650. Just as a comparison, PILBARA Minerals has a lot more shares issued than ALLKEM Limited. By memory, ALLKEM has about 630 million shares, and PILBARA is about 2.3 million shares. But if we were to convert the share price to match a similar number of shares, PILBARA would be worth about $20 a share in comparison to $13.70 of a ALLKEM Limited. So PILBARA worth obviously a lot more at the moment, but it is undervalued according to the earnings low valuation at the moment, even though there are some downgrades. Okay, people think that stock is going to start falling, but again, if lithium prices bounce back, that's where we're going to see the first lithium stocks, ALLKEM Limited and PILBARA Minerals, outperforming the other lithium stocks. And finally, I'm not going to talk in this video, but I'm going to make a dedicated video, going to record a dedicated video about Mineral Resources, which is also a lithium producer and has been very profitable this year in comparison to last year, thanks to its lithium production. And I'm going to look into that later this week. Okay, so just keep that in mind. So ALLKEM Limited, PILBARA, and potentially Mineral Resources, but I remember that Mineral Resource has a huge exposure to iron ore, so you want a diversification, not just in lithium but in iron ore. Go with Mineral Resource, which the X code is MIN.